So, you want to save for a big investment, fund a business, or just make money for your long-term success? The question is, where do you keep your money? Where do millionaires store all their cash? Because there's no doubt that a percentage of your income is to keep for you to be able to grow financially and ultimately use it to acquire assets, but there are too many choices. First of all, it's maybe a really bad idea to physically store your money for two main reasons. First of all, if you keep it in a safe in your basement, your money will lose value due to inflation. Especially with inflation rates of 2% and higher, your money will just lose buying power. This year doesn't look good either, inflation-wise, since the government is giving your money away and the situation. The other reason is simply that if there are safer ways to store it, that might at least make up for the inflation rate. It really makes no sense to keep it all at home where anything can happen to it. Take a look at billionaires like Ray Dalio and Warren Buffett. They only have about 1% of their money in liquid form. They always make sure that their money is not staying still but is moving, and this is cash flow. A very important concept is explained in Rich Dad Poor Dad by Robert Kiyosaki and in The Richest Man of Babylon. Instead of having money sitting somewhere, you need to make it work for you. What having money work for you means? Basically, this means that without much dedication, your money is multiplying simply because you have invested it in a clever way. There are multiple ways of doing this. For example, you could invest in stocks for the long term, or even invest in a business that can run without your attention. The first one we'll explain later in the video, but let's talk about the second one first. Becoming a key investor in a business is very attractive, especially since it's a way for you to become wealthy in a short period of time. If you have the knowledge to understand and evaluate business ideas, then this one actually has a lot of potential. So you just drop some cash in a business, then you just wait for the return. While this is riskier, it might be worth it since returns can actually be really high. So you basically have a bunch of money coming in without lifting a single finger. So that's a way of having your money work for you. But there are other less risky ways that you can easily apply without very much knowledge. However, here's an important concept. Money is useless if you don't use it. Ask yourself this question: why are you trying to save money? Are you going to reinvest it into something in the future, or are you just keeping it for no real reason? Having a percentage of your income saved in case of emergency is important, but a lot of wealth really has no real purpose to sit there and just do nothing. Many people have this tendency just to keep cash just because they feel comfortable, but that's a mistake that you shouldn't make. If you're looking for growth, you have to keep the money moving. So, you have your emergency account thing, but where can you drop your money without spending hours of research and taking huge risks? Well, a traditional savings account is vaguely making you any money. Actual chances are saving accounts won't even make up for the inflation rate, since most will give you an interest rate of about 0.05%, maybe if you're lucky 1%. So, these are the better places to keep your money that have at least some advantages over traditional saving accounts. Number 1, online banking. When online banks first started operating, nobody trusted them. I mean, they were really new. Not everyone even knew how to use them and access them, so they weren't so successful. Now that things are more and more digital, especially thanks to COVID-19, online banks have more power and influence for good reasons. Obviously, you should still do your research before picking one, so look for banks that have been around for some time. If you pick a bank that came out of nowhere like a month ago, don't be surprised when you lose all your money. Now, the reason why these are better than traditional banks is simply that they offer more services at higher interest rates. They offer higher rates because they don't have the costs that traditional banks have, such as paying for the location or the numerous staff. Then, operating from an online app has countless advantages, like always being aware of what's going on with your money, get cash back easily, and even trade Bitcoin and invest. Some accounts are even totally free, and the cost of operations like withdrawals and transfers is very cheap, if not also free. Number 2, diversified dividend investing portfolio. If a savings account doesn't sound right, you can choose something that is slightly riskier, but that will bring you more money. I'm talking about having a diversified investment portfolio, and if you do the right moves, you can make yourself a nice return that ranges from 2% to 10% or even more. Stock is nothing more than a piece of a company. It's like you're a member of the company and you participate by giving them your money. In return, you'll receive a percentage of the profits of that company, and this is called a dividend. So, if a company doesn't do well and they don't make any profit, you can lose your money, and that's why this is riskier. However, investing in the long term already reduces risks. And another technique that is widely known as the best way to increase the odds of successful investment is to diversify your portfolio. That means you're not dropping all your money into one company. You're actually investing in a multitude of companies with potential. You have to look for companies that have been around for a long time and that is reliable and that you can succeeding in the next 2 to 10 years. You do have to do some research before investing, but there are companies like Google and Microsoft that aren't volatile, thus making them safer than others. Number 3, blended portfolio. This is similar to the previous one, but it's a great solution for those that don't know or don't want to learn how to pick stocks. A blended diversified portfolio that contains both stocks and bonds are great to those that don't know anything about investing, because these platforms are designed using a low risk strategy of blended portfolios. Solutions like Betterment and Wealthfront will help you choose a plan. Literally just insert your goals and they will create a plan. For example, you might want a relatively fast return, so they will create a portfolio of 20% stocks and 80% bonds. And that's it. Another place where people tend to store their money is in real estate. Now, when you're talking about real estate, it's most certainly not the most liquid form of storing your money. Simply because when you're storing your money in a physical asset like real estate, it's quite hard to pull your money out of the deal. You see, most real estate that people buy is usually for the long term, not short term, unless you're flipping it, of course. The problem with that is, however, that if you need your money urgently, selling a house can take up to 3 months in most cases, which means that although real estate is a very solid way of creating wealth and a very solid way of building wealth, it's probably one of the only ways in which when you put your money in, it's quite hard to get your money out. I mean, 90% of millionaires are invested in real estate for this very reason. I mean, not only is a house going to appreciate depending on the area in which you buy, it is most likely going to be giving you some nice monthly cash flow, which, if you don't spend it, can easily go straight back into buying even more real estate. So, real estate is by far one of the best ways to store wealth, simply because it is a very safe way to store your money, because unlike other volatiles of wealth storage, it is very unlikely that a house is going to drop significantly in value unless your house gets destroyed by natural causes, in which case you should probably have home insurance. But by far, overall, storing your money in real estate is probably the greatest way to store your money, simply because you can also use leverage in order to buy more properties and create more wealth.